Hello, today is Thursday, October 8th, 2009, and this is a Sphinx Forex review for today. Before we begin, I just wanted to acknowledge some clown yesterday sent me a message about the video saying about lagging indicators, blah blah blah. Well, apparently he didn't do all of his homework, because he would realize that I've been showing the same method on YouTube under our old name, which was Oracle Forex, and I refer to that on one of the eBay postings. As you can see, I got 23 videos just on the Oracle, which is the same methodology, and you feel free to go look at these. You can see 182 views, so a lot of people was following this, and then we had stopped it. We had a medical condition with one of our guys, and we had to stop. And in the process of that happening, my IT guy dropped the ball when the Oracle Forex domain expired. He forgot to renew it, and someone snatched it up from us. So that's why we had to switch over to the Sphinx Forex label. So anyhow, this knucklehead had two posts, two or three. He's been a member since May of 2009, and he trades Fibonacci's from what I saw. So I just wanted to acknowledge that if you do listen to this video as well, you're a knucklehead, because the fact that we trade over $2 million under this methodology can be easily validated at PFG and or FXCM. Feel free to email me if you need the contact person to validate this information. Be more than happy to give it to you. So anyhow, enough of the banter, and let's get to the stuff. Alright, the quick housekeeping. The blog is where we post the videos, and if you want to buy the program, all you gotta do is click the link there. Anytime I do a Twitter update, it gets automatically posted on the blog as well. You can follow us on Twitter. Just go to twitter.com/SphinxForex, and you can be notified whenever I do load up a video, or if I say what's going on with the currencies during the day. You'll be notified there. Alright, let's go ahead and get to the charts. USD just got pounded again from yesterday. The MACD reset itself here. This candle came through, so there was a breach. 1 pip above this high was your entry, which was on this candle here. Your stop was never compromised. Nice big move, made your money, bang. You missed it, don't feel bad. You could have got in if you're risky on this entry here. You could have got in and took it back up again. Then yeah, the MACD was pretty much exhausted, so I would not have taken this new trade. I would let it reset itself, which you know, then you saw it came to the low side. There's no way in God's earth that I'd be selling this currency right now. It's just too strong. The USD is just too weak, so I would not have sold up in this area. Even though you technically didn't have a trade, I still would not have sold it. You can see you didn't make a new high off of here when you came back to the long side, so you're pretty much flat. You do have a short here, but again, I think this is just a quick correction on a higher time frame. And there's your hourly, and you could see with the hourly that it just could probably just a little retracement. So I'd be very apprehensive in selling the euro against the dollar right now. We should pretty much see the same thing for the pound, just whether we had a good setup or not. Let's see, European session came on here. I don't know if I like this, how far this thing came through to take the high, but it would have been a winning trade if you would have taken it. MACD is pretty extended, so I would not have went long on a new high here, even though it looks like it would have panned out okay when you got up into this range. Then the currency flattened out. You got a short in effect now on this candle here, making a new low, but again, I would not be selling this currency either right now. Euro yen, MACD was not really doing much. Let's see, you didn't have a new high until this candle here, and your stop was pretty deep, 1 pip below here, so it would have been a winning trade. It took a while, would have taken a long time to get to your money, but you would have gotten it eventually from this currency. So I would let this thing retrace a little bit. You actually have a long on here, so you're actually in the money if you're doing that. So I would follow this thing through. Once this trade, I would let this currency reset, because it's pretty extended right now. You can see the trend is just up, 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 up. So I would just let this thing take a little bit of a breather once you finish up with this final trade if you're in it. Dollar Swiss, we should see the opposite direction. There's your shorts. Right here, new low, bang, made your money. Wouldn't have taken that because of the way the MACD set itself up, but if you're aggressive and you're taking it, you could have got some money out of this move here, which wasn't too bad. Then we reset. No way I'm going long for the same reason I would not go short on the euro or the pound. You did not have another trade to the short side set your way because the MACD went high to the long side, so that was not a confirmed trade short. You do have a confirmed long now, but again, I'd be apprehensive to buy this currency based off of the weakness of the US dollar right now. And then lastly, you can see if you get the program and you use your charting package on MetaTrader, the one indicator I give you, which is the pivot point, it automatically resets every day for all of these moves. It tells you what the averages are. So you can your pivot points will be automatically set for you, which these things are better than Fibonacci's to begin with. So anyhow, gold is just completely off the charts, as you'll see. Look at the price of the Australian. We seen something similar yesterday in the 8,900. Look what happened today. It went up into the 90, almost 9,800. So this thing's flying right now. So just be conscious of the price of gold, and that'll tell you what this Australian's going to be doing. Alright, that's all we have for today, and we'll see you guys tomorrow.